house prices in the UK. Yes, everyone loves to talk about house prices, so we're going to give a little bit of an update as of March 2024 on house prices. My name's Mark Ashworth and welcome back to Property Insight.
I'm Neil Harding.
So house prices. So the reason for this update is because there's been some news out by Halifax. Halifax and Nationwide in particular often bring out data, I think, on a monthly basis with various updates. So it's always interesting to look at the data because many media outlets, shall we say, skew the data and the way that they feel fit. So we often like to talk about it, look at the numbers and see what they think. So apparently the average house price has risen by 0.4%, which is interestingly the fifth monthly rise in a row. It doesn't really feel like house prices have necessarily gone up, but I think in light of the fact that inflation has gone up very much, and we've discussed this before on the channel, that actually house prices really are still arguably very affordable based on everything else that's been going up. But 0.4% doesn't seem that much.
No, in the grand scheme of things, it's not so much of a move in either direction that you would think, gosh, this is headline grabbing stuff. I think probably what's interesting is 5 consecutive months of an increase of some sort. And I don't think in any one of those months from memory there was anything more than maybe 1% was probably the biggest that there was in any single.
I mean, according to the data, it's 1.7% annually. But last month it was 2.3. So maybe the last month has been a little bit slower. I mean, obviously we had some pretty poor weather in February, and I think that makes a difference to people's sentiment, doesn't it?
No one wants to buy property if it's raining too much.
Can we be bothered to go and view all these properties when it's absolutely lashing it down?
Yeah.
So the typical UK home now costs £291,700 on average, which is £1,000 more than last month. I mean, obviously, it's, these figures you kind of think, is that really true? But, they're basing it on quite a lot of mortgage arrangements and valuations, so there are obviously averages, and there's always, you have to caveat, London areas and the south areas and the northern areas, there's obviously going to be quite a disparity there between those prices. But nevertheless, on average, I don't think it's a bad thing that prices are going up. I mean, as investors, you always want to get the cheapest properties, right? But to have some kind of growth, particularly with inflation at the levels that we've seen, I think it's important.
Yeah, it's a good point. I mean, I think we've had comments on the YouTube channel in the past about whether or not it's in our vested interests to promote the fact that housing market is buoyant and doing well. And in all honesty, I think all we're trying to do is actually just relay the news to the audience as well as we possibly can, because I don't know if it's always our bias that we really want the housing market to be doing incredibly well. Actually, most of the better deals that I've done have come at a time when the housing market hasn't been doing quite so well, and there are probably better buying opportunities out there in a crash or in a stale market and an overly cautious market as a buyer than there are when prices are going up and up, because of course you don't want to run the risk that you're buying right at the very peak and you end up discovering 2 years later that you've paid 10% too much for the property. It was inflated in its price.
Yeah, and I think also, when we talk about the property market as people that are investing in it as an investment, as wealth creation, or even simply as a business, I think that's a very different attitude that we take against it being a residential purchase. So often people will not necessarily ask for any discount when they're buying their own homes. I think often people overpay for their own homes. As a property investor, do I think that's a bad thing? No, I don't think it is. I think if you've got a home that you really, really want and you love it and you see yourself living there for a long time, I don't necessarily see that you should be trying to let's say, negotiate the best deal, because obviously you could then run the risk of losing that property. Whereas from an investment perspective, if you lose that property over there, and there's plenty of other properties that will come up with similar criteria that you can purchase, later on. So I think the general media talks about the property prices based on residential purchases, and I think it's a very different thing. I'm not sure how you feel about that.
Yeah, I completely agree. Your motivations are very different if you're buying a property. For the vast majority of properties, of course, we have to remember as property investors are being bought by owner-occupiers. That is what drives the market more than investors do. I can't imagine it ever being different to that, in all honesty. And you're not buying a property with a profit motive. Of course, you're buying a property because you want to live there, and it's exactly what maybe you and your family want. And maybe paying £5,000 more than you think it's probably worth, but it means that you get the property, you get to live where you want to live, raise your family where you want to raise your family. That's way more important than £5,000 of profit or something. So
I think if you look back at the end of the pandemic, when we saw things getting better in 2022, 2023, we saw those house prices go up massively because people were out there going, right, this thing's coming to an end. We're going to buy that property we were going to buy last year. And lots of people had quite a bit of money in the bank because they weren't able to go out and spend it. And that pushed the prices up. So the house market pricing does tend to be reflective of the residential market. And as a property investor, if you're investing in stuff for business purposes and for obviously long-term wealth, then obviously, you can benefit from the lulls and the not so great times when people are being a little bit more cautious. Certainly, dare I say it, in the cost of living crisis, it's probably not a bad time to be buying property. Interestingly, our area, so we're based down here in sunny Cambridge, which is kind of eastern England, not quite as expensive as London, although Cambridge itself is rather expensive, but we invest in the area around Cambridge, but eastern England saw the most downward pressure on the prices, which is always interesting because it always seems that the northwest in particular, according to the data here, saw positive growth of 4.5% on an annual basis to £232,000. Wales as well has recorded strong increases in the last year. London, obviously, again, the highest average house price, £536,000 average house price in London. No wonder everyone's getting their knickers in a twist about the is it the housing ISA that was introduced by the government, where basically people were encouraged to save money, but obviously it only applies if the house costs £450,000 or less. How does that work in London? Just don't know really. Prices in the capital have increased 1.5%. And it's the first positive annual growth seen since January last year.
And we haven't really got an awful lot to say and add about the mortgage product market at this point in time, have we? It's been fairly stable and quiet, mortgage products. Not an awful lot to relay, but one place I always go on to is the Mortgage Works website for buy-to-let mortgage products, because it's a very good rule of thumb to see what you can borrow money at for a buy-to-let investment. And they're quite often the first lender to move on their rates, I think, and adjust them to the market, and then a lot of other lenders follow because they're the nationwide arm of lending for buy-to-let. They're one of the biggest lenders. And I saw just a few days ago that right now their product for 75% loan to value within a limited company with no fees is 5.29%. And I quite often look to see what the rate is for no fees, because I always feel like that's the true lending rate, because the lower the interest rate, they just increase the product fee to massage the numbers around. So I think 5.29 seems to be the sort of true borrowing rate.
For how long?
That was a 5-year fix. Good point.
Interesting though, because the interest rate is 5.25, isn't it? But interesting that it's almost bang on the actual base rate, and they're prepared to keep that for 5 years, indicating that there could well be a reduction in the interest rate over that period of time. I mean, I think we are expecting it to go down somewhat. How far and when is anyone's guess. I think that wraps up our chat about house prices this time. So we hope that you found that insightful. Please like, comment and subscribe to the channel, as it massively helps us to reach more people and bring more content like this. So we'll see you guys on the next one.